Welcome back, everyone, to part 5 of our week-long video series. What is the best investment for you? What is your goals? What is it that you're looking for? We put together some different options, looked at some different investing strategies. We're going to recap everything. That way you can decide what might be the best avenue for you. Now, if you're brand new to the channel, my name's Josiah and I trade stocks and cryptocurrencies for a living. And if you hate making money, this is not the channel for you. If you want to learn how to get out of the rat race, become financially free, let your money work for you, be sure to subscribe to the channel, hit that notification bell, give me a thumbs up, and if you really want to get into it, come down, hit that bottom link or the top link below the video, and join the Investors Jumpstart program. You won't be disappointed there. So let's recap what we talked about this week. We went over the 401k. We use that as a benchmark just to kind of set the tone because that's the #1 investing tool in America. We went over dividend paying stocks. We talked about real estate. And we went over my personal favorite, the covered call and cash secure put trading strategy. Now, what does that get us? We're going to start over here and work our way through, talk about the good, the bad, and the ugly of it. So with the 401k, we put in $100,000. We get a company match. We'll just say it was 1 for 1. So we got $200,000. I went way on the upside of that because the national average is actually under 5%. But I said we're going to get a 7% ROI. We do that for 10 years. We end up with a portfolio worth $340,000. Now, with that being said, we had no income. We had no way to utilize this money to benefit us in any way over those 10 years. We just simply grew a portfolio. So if just a portfolio is what you're looking for and you don't want to put in any effort, very low skill level here, anybody can do it, and that's what you're looking at. Now, if you want to get into it, take control of your finances a little bit. We talked about the dividend paying stock. Now, at only a 6% dividend, which is, if you put together a decent basket, you should be able to punch well above 6%. But we figured 6% dividend, some companies, it was going to give us about a 10% growth per year over 10 years. That gives us a portfolio of $200,000 plus we've had $60,000 worth of steady income. Now that's pretty nice. The real difference between here and here is, we got a lot more income with rental properties, but we also have issues. You have something can break down. You have tenants that don't pay. This income is not guaranteed. This income is pretty well guaranteed. If you get good companies with a long-standing track record, this income's pretty much guaranteed. In fact, it could be above that. Okay, so that gives us our dividend paying stock. Good overall, especially if you've got a large amount of money. If you got maybe $1 million or something, this is a good option because this is a good, safe strategy where you really don't have to worry about much. Now, real estate. One of my personal favorites. The problem is the gurus out there don't tell you the downside to this. You're going to need an infrastructure here because you're going to have tenants that don't pay. You're going to have a roof that you have to replace or an HVAC system or a hot water heater. Something's going to go wrong. You're not going to get this $120,000 over 10 years. We took that $100,000, we put 20% down, we bought 5 different properties with that. So that gave us an instant value of about $500,000. We're leveraged here, so you need to have that infrastructure. If something goes wrong, if the tenant's not paying the rent, do you have the income to be able to go ahead and pay that mortgage? Because you're going to have to pay that mortgage regardless of whether you're getting income or not. That's the real difference between this and these. With these, you don't need infrastructure. You've got your $100,000, you are set. With this, you're going to need some infrastructure. You're going to need to understand the ins and outs of this, which means you're going to need a pretty high skill level of what you're doing here. This is not plug and play, like this here. You just plug this in, you're pretty well done. This is going to require constant management, and it's going to require that you have a little bit of skill under your belt to be able to pull this off. If you can do that, we bought 5 properties. We now instantly have a $500,000 portfolio. We get 10% growth on that. That gives us a $1 million portfolio in 10 years' time. And we're getting about 12% ROI, about $12,000 a year in income. If nothing goes wrong, everybody pays, everything's perfect. I can tell you from experience that if you could get half of this, you're doing very, very well. So that is what we're looking at in the real estate category. Great option, but you need to be able to dot your I's and cross your T's if you're getting into this. Do not jump into that blindly. Now, let's get over here to the cash secured puts and the covered calls. Now, we talked about that in yesterday's video. We put $100,000 into these stocks. We mix that up. We're looking to buy these stocks at a good price where we're expecting them to go up, because we're looking for growth stocks here. Highly volatile stocks that are going to bring a premium when we're selling those covered calls or putting those cash secured puts down. I've been doing this with several stocks. The UVXY is one that we've been talking about on this channel here for about 3 months now, and it's been doing extraordinarily well for us. And we've actually been making 3.8% weekly returns on our covered calls and cash secured puts on that. Now, we only figured for this instance, absolute lowest that you could possibly get if you're going out there and doing your research, it's going to be about 1% per week, 52% a year. Now, that is $52,000 a year on your $100,000 investment, which gives you an income over 10 years of $520,000. The income on this absolutely blows the rest of them away. And because we're buying growth stocks, that is giving us a large growth. If we get 40% growth a year, which is nothing, we've made 40% growth on our UVXYs in the last 3 months alone. But if we get 40% growth on this, then we're looking at having a $500,000 portfolio at the end of 10 years, plus that $520,000 worth of income. And that's assuming you don't reinvest any of this to boost everything that's going on here, which of course is what I do on a day-to-day basis. So this gives you some different options. This here is my favorite. I also like this. And then as I grow, as I have money just sitting there aside, this is a good option. And remember, you can always throw some cash secured puts into your dividend portfolio. Now, these stocks are not going to have huge premiums, so you're not going to be getting, 1% a week in premiums. You might get 1% a month. However, that would boost your income by a considerable amount. If you're getting an extra 1% a month, that's an extra 12% a year. That's another $120,000 over a 10-year period, which makes this far more attractive if you take this and implement this strategy in with it. So I hope this gave you some stuff to think about. If you haven't seen the previous videos, go back and watch them. I tried to put, not only the highlights that everybody talks about, but kind of the hidden things that people don't talk about, that people go into this not knowing because no one told them. I want you to be informed. That way you can make a great decision that is going to benefit you and benefit your family. Now, if you like this content, please give me a thumbs up. Share this. This is all about getting information out to everyone. I don't want to see people struggling, unable to pay the bills. I want to see people getting financially free so that you can live the life that you were meant to live. I hope you enjoyed this. Until next time, be blessed, and remember, never trade with your emotions. Always trade by the numbers.